we want to look at how to use the trading view, mostly for those who are not very conservative with it. And then we will look at the Quasimodo. We'll look at the market structure, and if time allows, we will do top-down analysis on how to do top-down analysis. So I hope we are ready for today. This will be a very important class. So I hope you have your trading view, because this will be best if you can do, or you can follow with me. So open your trading view. Let me give you 2 minutes. Open your trading view. So I hope we are here. I don't know how I can reset this. So first things first, make sure that you create an account. Make sure that you create an account. And then I'll just take you through the most basic things so that it becomes easier. Settings. So if you've opened your trading view, probably this is how it looks. If your trading view is not like this, you're free to let me know. This is how it should look like, or at least something close to this. Probably without these ones, because these are my own, but I'll show you how to do this. Alright, I was letting some people in. Let me see if I'll be able to bring this mic a bit closer. So is there a problem? Or those who doesn't have a laptop, don't worry, you can still follow through the phone. It still works. It still works. What happens is that once you create your account with your laptop, you can use it across devices. So that makes it even easier. I'll move this a bit. Good. So probably, but those who are using the phone, you can maybe use the landscape mode so that you can see what you're doing. But also, I'll post this video so that you can follow later. I hope that works. So this is trading view. The first things first, I love my working space very clean. So the first thing I'll do before anything else is to remove these boxes and anything that can distract me. So how do you do this? I'm sure those of you that are using, I don't know whether you can see it, especially if you're not using a laptop. Can you see this? It's like these small boxes here. The small boxes around this place. That is what I will remove as my first thing. That's my first thing. Now, those who are asking, I remember I had requested that each one of us downloads TradingView. TradingView. You can download it as an app in your phone or download the PC. So it's very important. You can download it either as an app or what or you can download the PC one. Yeah. So if your trading view does not look like this, don't worry. We will set everything so that it doesn't have to look exactly like this. It doesn't have to look exactly like this, but I just want to take you through the basic settings. The first thing, come to okay, right click, come to settings. I want to remove everything in the background. So you see where we have grid lines, I just come and say none. Now can you see that my screen has now changed? I'm not sure, I don't know whether you are able to see the change from there. I don't know. If you can see any change, kindly show me the thumbs up. Perfect. So I will convert it to none, but let us start from the symbol. Okay, Lynette, what's up? Oh, okay. Nimeona Lynette ameinua mkono. But anyway, let's continue. So, from the symbol here, this is the color of the... No, right now we are not connecting any broker. Right now we are just learning how to use TradingView. TradingView. TradingView, just that. Download TradingView. So we start from the symbol. This is the color of these patterns here, these candles. So you can choose to change. There are people who love or who like blue and black. So you can change it to whatever color you want. You can remove the borders. You can also change the color of the wicks. This depends on your preference, but I like to use the original color. But so if you cannot do it on your phone, don't worry. What you need to do is that you need to do these setups on your laptop, either a laptop or a computer. Either a laptop or a computer. What you do, once you open on your computer, just create an account. It will reflect on your phone. It reflects on your phone. So how you get here is you right click and then come to settings. Right click and then come to settings. This is how you get here. I don't know whether you can do it on the phone. Just a second, let me try with my phone. I see TradingView. So on your phone, what you can do, on your right side, okay, I don't think the phone will give you what we are looking for. The phone might not give you what we are looking for. So my advice is use use a laptop. Use a laptop, create an account, it will reflect on your phone exactly as you have done. It's only that I cannot show you my phone, but what I have on the computer has reflected or reflects on my phone. So that is the advice I give you. That is the advice I will give. Just a second, let me show you. So those of us that are using the phone, you will forgive us, but what you can do is you can follow again now from YouTube. You follow again, make sure you have a laptop, do the settings. These settings will reflect now on your phone. That is the easiest way you can do that. That is the easiest way you can do that. So allow me to continue. Right click, come to settings. We start from the symbol. I've shown you these are the colors of the candlesticks here. You can change to any color, but I just like it the way they are. This is the most important. In the symbol, come to time zone. Come to time zone, if you can see where time zone is. And then once you come here, change the time zone to your time. I have discovered we have people following from different countries, so you don't have to put it UTC +3 Nairobi. What you do is that you can put, or you can change this to your country. You can change this to your country. The reason that I love doing this is so that when I mark the Asian range, I'm able to time myself with my time zone. There are people who like to use it the way it is, New York time, UTC. There are people who love using it the way, but as for me, and my preference and my advice is, let the time in the trading view correspond with the time of your country. So this will help you when you are doing backtesting and when you are doing the relationship between time and price. It will really help you. It will really help you. The second thing, we come to status line. So this is basically what is happening now on TradingView, what you want to see and not see. You can choose, you want to see the logo of the pairs here. If you look at this corner, you see this left corner here, this one. Once I disable that, the logos are vanishing. So this is literally what you want to see, especially on the headings of this, which I don't believe they are that important for now. You can come to scales and lines, and then you can choose what you want to see here. For me, I leave it as it is. I leave all this as it is. Then you come to canvas. This is where now I will change and make sure that the chart is clean. The chart is completely clean. And then this is where you can change the canvas, the background of the canvas. Kuna watu you love black or dark, you love dark colors, especially if you have issues with your eyes, you can do a dark color, but as for me, I am good. I like it as it is. Everything else you leave it as it is. All this, don't change anything here, don't change anything here. And then with that, we are done with the first thing. The second thing, which is the important thing, is you come here to where you have a watch list. I'm sure maybe your watch list has a lot of pairs here. You can find that you have like 20, 30 or 50 pairs over here. For me, for now, I'm only trading GU and EU, and I gave my reasons for that. Number one, once I get a setup on GU, I know that I've gotten a setup on EU. It's as simple as that. If you can check, I have a supply zone I've marked on GU, and almost the same place I have a supply zone marked on EU. It's easier for me, so I get double profits. So that is why I use these two. But don't worry, kuna mtu maybe you love to trade gold, others US 100. I've traded US 100 before. Others you want to trade UJ, USD, JPY. Now, for those who feel like this language is ancient or it is alien to you, go and watch our first class where we looked at the pairs, trading pairs, Euro USD, GBP USD, US 100, all those. Some of them are Forex, some of them are indices and such. If you're not seeing Freetown on the time zone, Freetown is GMT, just a minute. Freetown uses GMT. Okay, I'll check for you. I think it is UTC plus 0, if I'm not wrong. UTC plus 0. UTC plus 0, plus 0, plus 0. UTC plus... I'll check for you. I'll check for you and send you in the group. So where are we? Here. If you want to add your list of pairs, you see where you have watch list, there is a plus sign here. You have all these and they are in different, they use different brokers. The broker that is most recommended, and the one I would also recommend, is OADA. You can see OADA here, but I usually use GBE because of the broker I am using to trade with. But OADA is good. You just do your analysis on OADA. By the time we come to start executing trades, we can change accordingly based on the broker we will use. So just use OADA to do your analysis. Just use OADA to do your analysis. It's one of the most accurate, because for us, for SMC traders like us, a 1 pip mistake is a lot of mistake. A 1 pip 1 pip is a lot of mistakes. So make sure you use this one, use order for now, unless we change to some other broker that does not use this. You can see that you can have paper stone. For example, let us do GBP USD. You see you have paper stone here, because this is what we are going to do for testing with paper stone. So when we get to that point, we can use this to do our analysis. But for now, just use order to do your analysis. So you can add any pair that you want. If I just click on it, you see that it appears on this list. You can add as many as you trade. But as for me, I like my chart very clean, very clean. So those are the only 2 pairs I trade for now. I can change later if I get a reason to, but for now those are the pairs I trade, and that is all I need for now. So another thing I want you to check, probably this is the last thing for trading view, is how to get your favorite symbols here. Can you see this? Your favorite symbols here. So these are the only symbols I use. This is a trend line. I use a horizontal line. I use a cross line. Actually, even this one I rarely use this, but I use it sometimes. This is the data range. We have fib, we have long, we have short, we have gun box, all this. So my work now will be to show you how you can set, especially the gun box, the fib retracement, and fixed volume profile. Those 3. I'll show you how I use those 3. Those are the most important: fixed, gun box, and fib retracement. These others, I know you know how to use it. For example, if I've gotten a position, I want to trade maybe a long position, I take this long position, then I place it where I want to trade, and then when I move, I am able to see my stop loss, how many pips, and my take profit, how many pips, and then I'm able to see risk to reward ratio. And the opposite is true. If I am selling, I'll come here and check the short position, and then I will place it on the chart, and I am able to see my stop loss. I'm able to see my take profit, how many pips I'm targeting. If you look at this, you can see these are 281 pips, and then you are able to see risk to reward ratio. For this one is 17. So that is how you use those ones. And then once we come to using paper stone, I'll show you how you can set this based on the account size we will open with, so that you can come here and set, and then it will give you what? It will give you the figures in dollars of how much you'll be making or losing, for that matter. So how do you add this? On your left side here, you can see we have a lot of symbols here. Once you check or you see the one that you want to appear on your favorites, you just click this one. Can you see there is a favorite thing here, add to favorites? So you just click it. Once you click it, it will appear on the list. So for the first one, for those of you who want to copy what I am using, I use trend line, then I use horizontal line, then I use horizontal ray, then I use vertical line, then I use the close line. Those are the only ones I use in the first symbol here. And then on the second one, I use the fib retracement, I use the gun box. Those two are enough for me. A lot of traders use different symbols. All these, there are traders who use all these. But as for our strategy, you will not need all these. These two are enough. Fib retracement and gun box. The third one, I don't think I'll need any. The fourth one, long position, short position. And then I use the fixed rate volume profile. I'll show you how to use this. And then the price range and the data range. Although I rarely use this, but as we continue, I'll show you how to use these ones. I rarely use it. Then here I use the brush. The brush helped me to mark liquidity zones and all those things. I use the arrow. I use this one also, the arrow maker. I have the rectangle. This is what I'm using to draw this, maybe my order blocks, my FEG, all those things. And then the path. You use the path to draw your market structure like that. So on the text, the only one I can use here is this one, the text. This one. These others, rarely. I don't think I'll need these ones. And then on this cartoon here, the only person I use is this, or whichever. You can use any. This is to mark your trading range. You can use any of this. So this is what we use to measure pips and measure how long it has taken for a market maybe to come from one point to another. So if I want to measure how many pips are there from this edge to this edge, I'll just click this and then click from here to here. And you can see down here, this is 231 pips, and it has taken 8 days, 12 hours, and then these are 40 bars. So this gives you that information. This is the ruler that gives you that information. So if you want to know how many pips are there, maybe from here to here, you just click from here down to here. And then you can see those are 41.8 pips. So that is what it used to do. Then we have the zoom, this zoom one. So if you want to zoom a specific, maybe it's an order block or something, and you want to specifically zoom that, you click here and then you highlight where you want to zoom and then release, and then it will zoom. You see? And then it zooms. If you want to go back, you just click on the minus and then you go back to, you just zoom out. So that is how, if you want to zoom a specific area, you just click and then do what? Select and then release. It will zoom to that area. And then if you want to go back to reset, just click on the zoom out and then it will reset. Or you can do that using your mouse. Those using your phone, you can do it using your two fingers or something like that, to just zoom in where you want, like that, and so it becomes easier for you. These ones, I don't think you will use this. This one is used, for example, if I want to draw from here to here, like that, and then I want to draw from here to here, I have to go back again and click for me to draw from here to here. But if I click this one, you see this one, I can keep drawing without having to go back to this. I hope you can say that. So that is how this one is used. this one. So I don't think we need this, so we can just delete this, delete. So we have this one. This is where you lock all your drawings. For example, if you don't want your drawings to move, you just lock them with this one. And so you see, when I click, I can't move the drawing. But if I remove, I can move the drawing. Okay, if you want to hide all your drawings, you just click this one and you can hide all your drawings. And if you want to delete, you just click on this one and you can delete everything that you do not want. Number two, once you do all your settings, you can come here and save your settings. You right click, settings, and then you can save your settings here. For example, you see mine are already saved here, so it becomes easier. So you can use your settings across devices. But let's say you have a laptop, you have a phone, you have maybe an iPad or a tablet. You can use your settings across your devices without losing any data whatsoever. So that is how you use TradingView. What else? So I want to show you something else. So if you want to mark your favorite time zones, you see here at the top you have a place where you can mark your favorite time zones. Monthly, these are the ones I use. People have different time zones they use, but these are the ones I use. So you just click here, you see this button here, you click it, and then you can mark your favorites based on the on what you use. So for me, my highest time zone is the monthly, and then you have the weekly, daily, 4 hour, 3 hour, 1 hour. That means 15, 5, 3, 1. Those are the ones I use. And mostly even 3 minutes I rarely use it, but in case I want to refine my entry, I will use maybe 3 minutes, 1 minute, or 5 minutes. So this is where you mark your favorite time zones. Number two, there is something we call a line chart. We will use it especially when doing Quasimodo, a line chart. So if you check here, we have candles, then we have line. We have candles, then we have line. And for you to bring it here to your favorites, you just click here and then you can see it. We have the line chart, and then we have the candles. All these others, I don't use any. So if you want to see this in a line chart, you want to remove the weeks, you just click that one, and then you can see the chart without the weeks, and then you can return back to that one. Then we have indicators. You see where indicators are? This is where you add your favorite indicators. If you check, you can see I only have 3, and for these 3 I only use this one, the average true range, the one I showed you, and that is what you can see here. That is the indicator that I use. I don't use any other indicator. The other ones I use, for example, this one, if I want to mark the zones, if I want to mark specific zones, but it's not something that I use, because that is something I can mark without an indicator. So for now, this is the only one I use. But if you want to add any indicator, you just click there and then you have it here. You can check any indicator over here, and there are many. We have trade line, we have blah blah blah, we have a lot. We have RCI, RSI. This is one of the most used indicator. trend line with breaks, blah blah blah. We have a lot of indicators, by the way. We have a lot of them. So for me, I don't use any. I trust my guts and my analysis. I trust my analysis 100%. 100%. 100%. What else do you have here? We have this alert. For example, what I do, because I'm not always on the charts, maybe sometimes I'm busy, but I want to know maybe when the market takes out this high. I want to know when the market will take out this high. So what I'll do is that I'll come to the alert, click the alert button, and then I can move it. Let me show you. I can move it to where I want. So if I want the market when it closes maybe at a certain place, let's say so if the market closes, oh my god, it has already closed. Okay, alternatively, you can right click here and then add alert. You see this one there, and then click OK. So what happens is when the market closes this area, you will be notified, and you will be notified even in your phone. If you have trading view on your phone, when that happens, you will also be notified on your phone, so that then later you can, maybe if you want to put an order limit or something, you can do that after that has been closed. We have the replay. Mostly this one is for when you are doing back testing. I don't think we'll be using this one now. What else? If you want to take a screenshot, maybe you have done your analysis and you want to sell someone, you can use this one to take a screenshot. And blah 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 blah. Okay, on this area here on your right, we have the watch list here, and then we have the alerts there, and then we have the data window, which I don't think we'll use, and then we have the charts. If you look at this, and you can choose. For example, you see I've chosen Forex here. You can choose all this, gold, blah blah blah. If you want to know what other traders are saying about Forex, you can come here. You see, for example, we amesema EU buys is official. But be very very careful, because we also have people that are mad in these charts. So don't follow a mad person. So you can use this. It can help you, by the way. It can help you to know what other traders are saying about maybe one of your favorite pairs here. So this is not for signals or something, but it's just a community. And if you have your own thinking, you just come here, write it, and said. Other people will read from here. So that is the work of that. For me, EU, I'm still waiting. Let those that are buying continue to buy. I wish you well, but for me, I'm waiting for it here. I'm waiting for it. This thing is about patience. It's about patience, patience, patience. The reason I'm waiting for it there is because all we have here is just liquidity. Liquidity. Oh, liquid. And FVG. So anyway, that is not what we are talking about today. So if you want to know what is happening, you can use this one, and then you will follow the what other people are saying about your pair, and you can even customize it to maybe your pair or something like that. So second, or the other thing, how do you use the gun box? The gun box. You see where the gun box is. So how you use the gun box is that there is something we said. I don't know whether you remember. You buy at the discounted price, and then you sell at the premium price. Who remembers this one? Nani anakumbuka hii? This is where traders are being induced. Who can remember that? Buy at the discounted price, sell at the premium price. Perfect, perfect. So those who are saying that we should be buying GU, let me show you something. Let us get a trading range, a 4-hour trading range. Okay, a 4-hour trading range, or maybe a daily trading range. So what is our trading range for the daily? Can you see this move from here to here, from there to there? So what are we expecting the market to do? I'm expecting that the market will buy from here. You see, from this point. But let's see whether it is valid for us to buy from where the market is currently. You take the gun box, you run it from top of the swing high to the swing low. You see, from the swing high to the swing low. The second thing you need to know is to look for the traps. Look for the traps. Look where the retailers will be trapped. For me, this is a trap because this is liquidity. So I cannot buy this market, okay, a large buy or a serious buy, unless this has been taken out. That is not why I cannot buy from here. Are you getting the point? Because yes, we are at the discounted price, but the second thing you look is where is the inducement. So what you can do if you want to do a small buy, wale watu wa FVG ndio nyinyi hawa sasa. Hapa ndio mko na pesa. But me, I don't trade FVG. I'll never trade FVG. You can do your trade here. Look for an entry and then look for a small buy here. So where do you buy to? To the next, this is the next, what do we call it? The next obstacle here. That is if you swing trade. This is not for day traders, if you swing trade. So those are some of the things. So you use the gun box to know where, until what point are you supposed to buy or to sell. So all this area below the equilibrium, this is what we call the equilibrium. You see where we have this one here. I hope you can see it. Let me remove. You can see this one here. Can you see it now clearly? This is what we call the equilibrium. And it is also allowed that you can buy you can do a small buy at the equilibrium. This move was from the equilibrium, this one, that move, but this move is also inducement. If you check, this was like how many pips? 132 pips, but it is inducement. That is why it was taken out, because the market was creating trade line liquidity. What to a trade line? Trade line liquidity. So that is liquidity over there. That is liquidity. And then you can save your for example, if you want to have maybe your BOS saved or something like that, once you do what? Once you mark, let's say I want to save this as, so that when I have a BOS, I don't need to keep writing. Once you do that, you just right click and then come to settings here, and then you can save it. You can save it as BOS, fair value gap, blah blah blah, all those things. So but that is insignificant. I don't think that is even but you can do that for saving time. So this is how we use the gun box. We use the gun box to understand where we have the premium price and where we have the discounted price. But now you also need to understand if this is the discounted price, or if this discounted price or if this low should be taken. If you look at this is the daily trade. We are in an up trade. Can you see that? We are in an up trade. That means once we get a move from here, we expect that move will take out this high. Once we get a move from here, we expect that it will take out this high. And there are two ways, by the way, because this can happen between today and tomorrow. I told you in the morning that today you should be looking for sales in GU and what do we call it, and EU. I told you that you should be looking for sales. So once we get, if this market will buy from the FVG, although we have a very notable nini here, what do we call it, a very notable, but this is not an order block per se, but this is a protected low, because this is the low that this is inducement, and then all this move came from this low. That is a protected low, but that is not what we are talking about today. Na time imeisha hivyo. So that is how you use the gun box, and then you can do your settings here. Mostly your gun box yako inakaa hivi ukifungua. Probably this is how it looks like, all these things. So you can do your settings, so that, because I love my things very clean, so I remove everything that I'm not using. If I'm not using you, I remove you very fast. Very fast. You see all this? So it makes my life easier. Okay, background like that. You see now it's very clean. Very clean. The same thing with the fib retracement. So if you can check, my fib is very clean. if you open your fib retracement, probably it has a lot of noise. It has a lot of things. Okay, let me, you see how it looks. Maybe this is how your fib retracement looks like. It looks like this, but for me, I remove all this noise and I only remain with what I want to use. And how do you use a fib retracement? How do you use a fib retracement? For example, if I take any move here, let me go to 15 minutes. If I take any move, let's say I take okay, this is a downtrend. Can you see this? This is a downtrend. We are making a series of lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So if I want to know where the market will retrace to, for example, let me take this one. I draw from there. Oh my god, it's it's okay, I'll just try to, I had not saved, but I can remove all this. There are a lot of things here I'm not using, so that is still okay. I'm not using this, I'm not using this. This one is okay. I don't need any background. So you want to know how you will set your fib. This is something I can do in the inbox. I don't think it's wise to do it here. I don't need prices, and then a small line, something like that. Very clean, very clean. And then I can also remove this trade line here. Trade line, remove it. Good. So you can see this one, So if I take this move from let's say from this low to this high here, from this low to this high here, I want to see where this market will trace back to. You see, this is what we have right now, this one, that move. So that means we don't know what is happening here. We don't know. This is what we have. Can you see this one? My god, are you able to see what I am saying? Send me a thumbs up so that I know we are together. Okay, I'm saying this is what I am saying. You see, there is this move. The market is doing a series of lower lows, lower highs, lower lows, lower highs, lower low. This is the last lower low before it broke structure to this point. Okay, so our trading trading is from here to here. So I hope you are getting me now. This is our trading range, our current trading range. So we don't know what is happening here. This is our current trading range. Are we here? Perfect. So if this is our current trading range, we want this market, once it comes down, we want to know where it will retrace to, so that we can take a position. Okay, we want to know where it will retrace to, so that we can take a position and then move with the market. So we take our fib retracement from up here to down here. Why are we doing that? Number one, because we know the market is bearish. We know the market is bearish. The market is bearish. So the second thing we know is that we should not sell unless we get to the premium price. And where is the premium price? From here to here. All that is a premium price. Okay? The third thing, we want to check the most optimal place that this market should come back to. So where is the liquidity? We are now in the premium price, but where is the liquidity? The first thing, our liquidity we can see is this one. So someone will ask me, why is that liquidity? Why is that liquidity? Let me show you something. So for us to remove all this noise, you click the line chart. Give me another like 10 minutes and then we'll be done. You click the line chart. So this is the you can write this down if you have a book. If the market, or when the market breaks structure, when the market breaks structure, retraces, then breaks structure again, the high that was created is always liquidity. If you understand these things, you will look like a witch. You will look like a real witch. So look at this. When the market breaks structure, retraces, breaks structure again, the high that was created is always what? Liquidity. So this is our current no trading range. This is what we currently are looking at as our current trading range. That's correct. So if we look at this, you take your path. This is where the market was. It went up. Then it broke structure. You can even use this one. But for now, because this is what I want us to use, it broke structure here. If you bring back just a second, and this is what we are going to learn next. It's called Quasimodo. Can you look at this? This is a break of market structure, so that you will not be confused, my friends. See, that is a break of market structure. If you can see that, show me please, so that I know I'm not talking to myself. Good. So the market broke structure, and if you look at this, this is another break of market structure here. That's another break of market structure. That's another BOS. So if this was this is what we were doing. We came up, the market broke structure here, and then it retraced, and then broke structure again. Can you see that? This high that was created here is always liquidity. Always liquidity. By the way, without even coming here, you could have come here and taken this trade from hapa ni nini ilikuwa hapa, let's see, let me remove this so that this thing is a bit clean, and then use the line chart. So this is what I'm saying. The market came, broke structure, retraced, broke structure again. You see, this is a break of market structure. This is always liquidity, and it must be taken out before the main move happens. Okay, it must be taken out before the main move happens. It must be taken out. So once you understand, because if you look at this is 0.5. What an is it on the left, so that values, where are they now? Center, on the right. Can you see this from here? From here going up, you can do your buy, no, your sell, sorry. But we want to see where is the most optimal place for us to take the sell, so that we will not be stopped out. This is it. So hii inaitangwa stop hunt. Can you see this? The reason it's called stop hunt is because the market made an inducement kind of a move here, and it is telling people that we are now buying. So a lot of people will buy, and they put their stop loss somewhere here. So the market needs to take this stop hunt before it makes the main move. So if the market breaks structure, retraces, breaks structure again, this is always liquidity. That means we must be looking for a POI above this liquidity, above that liquidity. I hope we are now following. So we go back. So where is the liquidity? This is the liquidity. So we have to look for a POI above this liquidity. We have to look for a POI above this liquidity. Above this liquidity. So if the market sells without a POI, you have to wait. You have to be patient, because the market is doing, or it's making another inducement. Okay, it is creating liquidity. If the market moves without a valid POI, you know that this is also inducement. So if you look at this, above this wick here, you see this wick here, this is where we are currently. My God, I hope you will not be lost, please. Don't be lost. Usikubali kupotea. Usikubali, katana roho yako yote kupotea. Don't try to get lost. This is where we are currently. You can see this candle, this red candle here. There's a this one. So I can label it as liquidity here. That is liquidity. And liquidity is actually let me make your work easier. This is what we are talking about, this one. That is liquidity. Okay? Because if you come back to the line chart, this is what we are talking about. So forget about the weeks. Forget about the weeks. The line chart will give you, it is called anyway, okay, let me not talk about that because I don't want to confuse you. But this is what we are talking about here. So when you get back to the candles, this is what we are talking about. So we need to get a POI that is above this wick here. A POI that is above this wick here. And if the market sells without any POI, we know what? Another liquidity has been generated. This is how market makers do. This is how they trap you and I in the market. This is what they do. And they will trap you every time if you do not understand this. So the market came back. Here, mimi nakwambia, these guys know how to trap us. If you look at this, it even made a BOS here. Okay, it broke structure again. It had broken structure, but it broke structure again. So it is telling people that we are now moving. So a lot of people will come and mark this as their demand zone. True or false? As their demand zone. And then they will say this one is above what? The 0.5. So iko kwa our premium price. But what will the market do? It will take them out like no one's business. And it takes them out and continues to sell. That is the most painful thing. Let me tell you why that happened. Because this sale that happened here, it is not selling from any POI. Because we don't have any FVG, we don't have any order block, we don't have any breaker block, we don't have anything. And this is what we call engineered liquidity. Engineered liquidity. That means this will also be taken out. Why? The only order block I am seeing here is this. Can you see that one? And then let me teach you something else. When you are marking, for example, you see this week. When you are marking an order block, forget about the wicks. Forget, this will help you to reduce even entering the positions, and also it will reduce your stop loss. So forget about the wicks. So this is the only order block we are saying, because this is the last buy before a significant sell. This is the last buy before a significant sell. So unless the market gets here, we will not get the main move. And this is the move that is even happening till now. Till now, all this move came from this point. This point here. Okay? So, we were checking the fib retracement. Fib retracement. So if this is above 0, okay, mostly ICT teaches that the main move in any retracement will come between here, 0.68 and 0.75 or 0.76. But what I need to teach you is that the fib will help you to look for POIs. For example, look at the 0.68. Do we have any POI? No. Why? Because this one is liquidity. If you use the line chart, you see? Do we have any? No. Do we have any here? No. Why? Because this did not sell from any POI. We don't have any POI here. The only POI we have is this one. I've marked this green candle. You see this green one here. Okay, the reason I did not mark the bearish candle is because another block is the last candle before a significant buy or a significant sell. That is what we call another block. So I cannot mark the red candle because this red candle from here going down, the reason we are seeing them is because this is where the market makers entered the market. So that is what we call another block. Another block. So those who are following on TikTok, someone is asking, why didn't I mark the red candle as my order block? The reason I didn't is because another block is the last buy or sell candle before a significant buy or sell. That is what we call an order block. So for us, this is where market makers entered the market. So this is where we are most interested in. This is where the sellers entered. This is where the buyers saw the market. They pushed the market the last. That means this is our order block, this green candle here. And then I've told you, when you are marking an order block, forget about the wicks. Okay? Forget about the wicks. Just mark the volume or the body. So if the bearish candle would have been bullish, we could have marked the bullish candle. Yeah, so for any order block, mark the last candle before a significant either buy or a significant sell. That is how you mark an order block. That's how you mark an order block. So you see that this inducement was taken out. Another inducement was created. And you see it broke structure. So a lot of people would say, because there is a break of market structure, let me look for an order block around this place. Let me look for an order block around this place. And they come, maybe they'll mark the whole of this candle. They'll mark the whole of this and say, this is our order block now. And it will align with the 0.62 or 0.618. But they will be taken out because they did not check this one. And most people also, the reason they will be taken out is because they will say, they will mark this as their order block, the whole of this thing. And then they will say, okay, this one has sold from the order block. That's the mistakes we do. But that is our order block. With trading, patience is everything. Patience is everything. So you have to be patient. You know, you could have missed all this from here. This is like how many pips? It's not even many pips, 17 pips. 17 pips. You could have missed that. But then once you get this one, once you get the main move, you flow with it until where you see the next liquidity downwards. So never forget this. When the market breaks structure, retraces, then breaks structure again, the high that was created is always liquidity. And before the market makes the main move, it has to take out liquidity. Liquidity, my mentor told me, is the engine in Forex trading. Liquidity is the engine in Forex trading. So if there is no liquidity, you don't have any Forex trading. Yeah, when marking the order block, forget about the wicks. Forget about the wicks. Mark the order block without, because if you mark the order blocks with the wicks, I'm telling you, you'll be taken out finally. If you don't leave earlier, you will be taken out. You will be taken out. Utatolewa vibaya sana. Vibaya sana. You will be taken out. So you mark your order block without the wicks. It will help you to get the moves. It will help you also to reduce the stop loss. So that is how you use what? The fib retracement. So liquidity is the oil that is, anyway, whatever you want to call it. Liquidity is actually the engine that moves the market. It is the engine. Without liquidity, we don't have Forex trading. Without liquidity. And liquidity, by the way, is you and me. Liquidity is retail traders. So you're just saying without you, we don't have Forex trading. So you must make sure, if you cannot spot the liquidity, you are the liquidity. If you cannot spot the liquidity, you are definitely the liquidity. Definitely the liquidity. And the market will take you out. The market will take you out. So I don't think we continue. It's already 9:30. I don't plan to keep you here. But actually, what I was showing you here is what we call Quasimodo. You see this? This is what we call Quasimodo. 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 This move here. So you are looking at having, if it is bearish, you are looking at having something like this. So we have this is our stop hand. Why is this our stop hand? This is our stop hand here. So this is inducing people and telling people we are now, kuna mtu ataiandika BOS hapa, which is still okay, and someone will think we are now doing what? We are now selling, and so they will come somewhere here and look for another block somewhere there, and then they'll be waiting to sell. So the market has taken these stop losses, and then here, once this happens, you see what has happened here. Someone will come and mark this as a BOS, and what will they say? We are now buying. So they will come here and look for another block somewhere there and say they are looking for a POI there. I want to show you how market makers play with our minds. You see? So we were coming like this. It was a downtrend. Okay, it was a downtrend. So we got here, there's a break of market structure. Okay? So or we in an uptrend, sorry. So tulikuwa tunakuja juu. We were doing something like this. So we were in an uptrend. So this thing happened here. We had this change of character. So that means watu wameona we are now bearish. Are we together? So the market came and did this one. Ilirudi juu here, it broke structure. Okay, and then let me do this one here. It retraces, break structure again. So this high will always be liquidity. This high. Let me show you in a chart so that it will be easier for you to understand. Let me show you. 1 hour. Let me show you. Okay, let's even start here. This is an uptrend. Are you able to see this? The market is making a series of higher highs, higher lows, higher highs. This was the last higher high. So from that, the market, hii ndio inaitwa change of character here. This one. I hope you can see that. This is change of character. Change of character. Then, what happened? After the market changed character here, this one, it did something. So the market has changed character here. It came, created a fake move, broke structure. Okay, it came back, broke structure again. So this is what we are calling inducement. Because the main move, if you remove the wicks, the main move must come from here. This is where we expect the main move to come from. I hope you are getting the point. But then the market came, induced people from here and said, okay, and you see it broke structure here. It has broken structure here. So what will you do as a retail trader? You will come here and look for an order block, and the market will always create an order block for you. It will create an order block for you. So it will create an order block here. So what will you be waiting for? You will be waiting, you see this retracement. Utasema the market will retrace to somewhere here, and then we will sell. But what happened? The market came, it took you out, and it did something. These people, they are called market makers. Do you see? It broke structure here. So someone will come and say, okay, maybe nilikuwa nimesoma vibaya. We are still in an uptrend. And you will come and say that this is now my order block, and you will want to go long. Where do you take, or where do you put your stop loss? Somewhere here. So the market will take you out here and take you out here, and then that is how you will never see it again. It will go without you like crazy. It will go without you. So this is what we call Quasimodo. We want, once we change character here, we want the market to come, create inducement, come down, wait for the market here. Wait for it. Here, patience most traders do not have. Most traders do not have this patience. So you have to wait for this market to remove this, and then look for a POI that is above the inducement. What is the POI? We have this order block or breaker block, whatever you call it. This is a breaker block actually. And then once the market tapped into that, it does not waste time. You will not see it again, because it has taken out these people and these ones. So it has enough engine and oil, like my friend is calling it, to just keep going and going and going. That is what happens. So today, who of you have become liquidity? Let me see. Nani amekuwa liquidity leo? Poleni, don't worry. That is why we are learning. If you become liquidity, don't worry. Don't worry. Don't worry. You just need to be a little more patient with the market. So once the market gets to here, you won't see the market again. So this is actually what we are calling Quasimodo. Kuna watu wanaitanga head and shoulder, inverted head and shoulder, or something like that. But we call it Quasimodo. I told you guys to sell EU in the morning, but you said I don't know what I'm saying. Don't worry. Don't worry. So I hope we have understood this concept. We will still come to it again. It's because our time is up. We will still come back to it again and look at those examples. But you can see, anyone that got this move from here, they made some very good money. This is 98 pips. 98 pips. 98 pips. 98 pips. So that is what we call Quasimodo. So I think we've done trading view, Quasimodo, market structure. So when we come back again, I don't know when, we will do top down analysis. Top down analysis, one of the most, or one of the best things, you should have in your trading career. Top down analysis. So for my friend Hilary is saying he confuses between break of market structure and change of character. Change of character is when we were going upwards and then we change from an upward trade to a downward trade. So this one, so you see this high, this was the last swing low for this high. So if the market takes down that high, this is called a change of character. Okay, now we are now in a downtrend. If the market takes the previous low, this one, we call this a break of market structure. So at least you've seen there, we have a change of character and a break of market structure. Yeah, that becomes very easy. And I think now we can call it a night. I know we've learned a lot, but at least we have, I was recording, so you can go through this video again and again and again until you understand it. So having said that, I wish you a very good night. Thank you very much.